Hello, I'm Finola Burke from Research as a Service, and today we're focusing on rent.com.au, ASX ticker RNT. I have with me Greg Bader, the CEO of rent.com.au. Thanks for joining us today, Greg.
Thanks for having us, Finola.
You've just reported your best ever quarterly revenues, and the core rent.com.au business delivered its 8th consecutive profitable quarter. Can you give us a sense of the operating environment in which you delivered these results?
Yeah, so it was a great result, great quarter. Renting market continues to be a really tough market. Where, in terms of the properties available, we're looking at about 54,000 properties available today. That's about half of what it was 2 years ago. So it's a really, really tough environment. But our products, our renter products, which make up about half our revenue, are designed to help people get into a house, make them stand out amongst the crowd, etc. So those ones still continue to go well. So even in an environment where we've probably got a few less people moving, especially over the last 3 and 6, we're still seeing those products get great traction. The other half of our revenue is advertising. That's had its second best quarter ever as a revenue group. We haven't really seen the slowdown yet in terms of interest rates, builders and whatnot, and that may come through, but yeah, great result.
And RentPay has just signed a strategic partnership with Origin Energy, which will enable bill smoothing on electricity and gas bills. What sort of demand have you seen for offerings like this, Greg?
So we've just actually, so in our utilities connection business, they've had really strong the last 2 quarters, and we've always seen utility as being a key part of RentPay. So this is really interesting. So I guess at its simplest, bill smoothing is people paying a little bit over time so they don't have a big bill once a quarter. So what we do with RentPay is we link that to your rental payments, so whether that's weekly, fortnightly or monthly. So you've already got that all set up. There's a direct debit happening, etc. So there's no real incremental effort, if you like, required. Now, we had 40% of customers express an interest in having that facility, once again, to smooth bills. The Origin deal actually takes that to a completely new level. So Origin recognises there's a benefit in them getting payments more frequently in terms of improvement from their cash flow. So in turn, we're able to reward customers for that. So if we've got a customer that's, and 30% of customers in Australia are Origin customers, so if we've got a customer that is gas and electric, average sort of bill, just by getting into bill smoothing, we're able to rebate them $5 a week. So that's $5 a week essentially off your rent for doing something that renters are bloody good at already, which is paying regular payments. So this is I'm really stoked about it because it just harnesses that power of renting, which is what rent pay and broadly rent is all about, is just making rent, recognizing it, and just making it all a little bit more simple. So yeah, really great product. We will launch that this month. We'll start some marketing. We'll obviously go to our own base. We're still getting 700,000 customers every month. We're at 1.4 million resumes. So we've got a large audience of ourselves that we can talk to. We'll refine the messages and then look to take it a bit more broadly after that.
And you've taken the time to get RentPay's platform fit for purpose for your users. What have been some of the learnings and benefits from doing this, Greg?
So the learnings were, and look, I take this on the chin. I went into RentPay probably a little naively, and I don't think that's unique amongst startup fintechs, etc. But we tackled a fairly big problem, and we've got underneath the hood of RentPay, there's a lot of technical might. You're playing with multiple partners in terms of payments and whatnot. We're a little restricted by the payment rails in Australia, so things like 2 days to clear direct debits, etc. So we've got to work around those. The security was always paramount. So security of our customers. We run a trust accounting structure for our wallet. So over the last few months, we've managed to halve the number of screens required to onboard a customer. So we still do ID, AML, all the required checks, but we've just made that flow a lot simpler. And that's, to be honest, we credit, the feedback from customers has been a large driver of that. We've just launched our new dashboard. It's a lot more logical layout. And once again, working with customers, we've been able to determine what they need right at their fingertips, what can be down a menu layer, etc. So it's really just a process of optimizing and making it user friendly. And there's always that, I guess, that natural challenge between making it really simple to use, but also covering off all the compliance, etc. So I'm happy that we're there now.
Okay. So what other trends are you seeing that are presenting opportunities for rent.com.au and RentPay?
So just in general, the renting market remains ludicrously tight. It's really tough out there. So we're starting to see some federal, more often state-led initiatives around affordable housing, etc. So that's good. And I guess having government recognition that there's an industry problem here is fantastic. That said, build to rent's really starting to gather steam now. We've seen the first major properties starting to come online, and there's many more. There's tens of thousands of rooms and apartments, etc., in the pipeline. What's interesting about build to rent is that it's quite new in Australia. It's been around in the US, multi living, etc., and in Europe for a long time. One of the biggest stress points we have for renters in Australia is around lease security, and lease security is amplified in our market because we have such a high percentage of our stock is owned by mums and dads. Now that's not bad in itself, but mums and dad owners' circumstances can change. Tough economic climate at the moment, so things can change. The renter may need to move out. So build to rent's particularly interesting because you have that corporate ownership. If you're a great renter, you can be there as long as you want to be there. In fact, many of them are offering 3 and even 5-year leases off the bat if that's something you want. Now, one of the challenges that sector have is when they advertise their properties on a traditional portal, they don't always compare favourably. They're generally priced about 5 to 15% dearer than an equivalent empty apartment, and that's because of all the inclusions ranging from concierge, etc. So we've recently launched on our site where we tag these properties, and the tagging of the properties does a couple of things. One, it shows the renter or the person looking for a property that there's something unique or special about this one. And we obviously have search filters and all that allow you to filter on those properties. For the developer or the agent that's listing those properties, it means that you compare somewhat differently to generic apartments available in that suburb. So I think we're working well with industry. There's a lot more to do. Education is a huge piece. Our blog gets over 100,000 visitors every month. And those people are coming in to find out about the industry, how to go through the renting cycle, etc. So we're working with industry. We've actually got a number of articles and whatnot on there at the moment explaining the concept to renters. And whilst it may certainly not suit everybody, I actually think there's a large percentage of the market, especially that inner urban type renter, that'll find it really great. I mean, one of the ones in Melbourne we're dealing with at the moment is their whole top floor of their facility is set up like a Qantas club. And the idea behind that is work patterns have changed. We work from home a lot more now. So rather than sitting in your apartment, you're able to make use of a shared co-working space within the building, access to wine bars, coffee, etc. So I think those sort of initiatives are great. And I think they're also recognising and jumping on, changes in how people want to live.
Well, I'm looking forward to catching up with you again through FY23 to check on the progress of rent.com.au and RentPay. Thanks for joining us today, Greg Bader.
Thank you, Finola. Cheers.